This is Sasha. Thanks for joining me in today's video. We got a question today, and if you have a specific question you want answered regarding options trading, investing, I'll give you my best shot from my past history, experience, losses, and all that good stuff. So submit a question by voice so that way you get a more detailed answer on video. And of course, check out some of our courses, books, education, live classes, webinars, all that good stuff on the website as well. Anyways, you can check out all those links in the description. Today we have another question coming in from William, so stay tuned. It's all about option receiving credit and premium, as well as some P&L things.
Hello, Sasha. I'm William from Malaysia. I'm your big friend, and thanks for giving a lot of valuable information for the beginner like me. Here is my question. If I am an option call seller, when I will receive the premium payout reflect to my account? Before or after the closing the deal, or once the contract expired? My second question will be how to make a stop loss in IBKR auto triggering corresponding to the stock price, not the option price. And my third question is, does the daily P&L reflect to the actual pre-ML with premium calculated into at once? Thanks, Sasha.
Okay, hey, good question, William. Thanks for listening. Thanks for joining us. Let me share with you some thoughts and insights. So basically what William is doing is he's selling premium. So if we're selling a call premium, let's say you normally have a stock, and here's kind of our, let's say, zero line, and you go ahead and you kind of sell a stock. So this is how you would go ahead and the profit and loss would look for a stock. When you're selling a call, then it caps it, and it kind of goes like this. So he's trying to collect premium on it from time decay. Those of you that are selling things like iron condors, you know, that's still collecting premium. It could be a vertical, on this side, call vertical. So the concept's not much different. You're really just trying to go ahead and collect some premium. Here's a better illustration, by the way. If we go ahead and look at it like this, so a stock is going to look something like this, right? You buy the shares, you want it to go up. When you look at a call, it's going to look something like this. Oh, and of course, you could convert it into a vertical. So anyways, the point being here is, when do you receive this credit or premium? I know it can be a little confusing. So I want you to think of it like a transaction that takes place. I know that when you sell something, right? Let's say you sell a phone. Let's say you sell a drill. Let's say you sell a camera. Anything that you sell, you know, eventually what happens is you get the money in your account and it's there, right? Now what's left for you to do is to deliver that item. So in a regular store, there's a checkout and then boom, they've delivered it. It's really quick. If you're ordering on Amazon or ordering something online, well, the person who sold you that item, they have to fulfill that transaction, right? So they have to ship it to you. It has to close out. Now you've already got the money in your account, but it has to close out, meaning they have to ship you the items. So the full transaction is not complete till the buyer receives their goods and, you know, the seller got their money. So usually the seller gets their money first, and then the buyer goes ahead and receives their goods after that. And that's how you create that win-win relationship. Now, when we talk about option contracts, it's very similar. The problem with options is when you're looking at it in relative to the real world is we're looking at time decay. And you might be in an option contract 10 days, 30 days, 60 days, could be a lot longer. So even though you're a net seller, right? Let's say we're looking at, here I just put on a Tesla position not too long ago. Just literally about 5 minutes ago. So here I went ahead and sold a vertical call on this side, and I sold a vertical put on this side, together making kind of a credit spread. Now, you could say, well, do you go ahead and receive that money in capital right away? In theory, you could say, yes, I do. In the real world, that's what would happen. In the option world, the brokerage accounts margin you, because otherwise what could I do? Well, I could just sell billions of dollars right away and just keep getting more and more money and credit in my account, but you can't do that, right? Because they margin you. So what the broker does is they margin you. So when you sell this, yeah, in theory you get a credit, but really it's not complete till the transaction is fully closed, which either you close it or until expiration. Because that means, hey, well, what if the buyer decides to execute their right? What if the buyer decides to go ahead and, you know, get the stock or put the stock to you, depending on if you're selling calls or puts. So in theory, yes, you do, but really it's a margin game and it's not fully complete. And I don't want you to think, hey, I could just sell $10 billion worth of credits and then all of a sudden your account keeps growing and growing. No, that's not the case. They will margin you, take part of your cash and kind of lock it up and hold it until that transaction is closed. So in order to really fully complete the transaction, I would say wait until it's closed, and that's really when you get your paycheck or payday in a way, if you're selling credit spreads or you're trying to make money from premium. So that would be my advice. That's how I would look at it. And right here, this position, as you can see, is down about 103. I just opened it up. So there's a little bid-ask spread issue there. And then if you look at maybe another position, like let's say Netflix here, this is a calendar spread. And you can see this one's profitable. So I could go ahead and close it out. This one is profitable for about $143 or $141. So when I close it out, that's when I get my money. Otherwise, I'm kind of margined out, or they hold part of your cash, about $1,090 worth, until that transaction is complete. Now, the second question you asked about setting a stop loss in the IBD platform, not IBD, but the Interactive Brokers platform. And it's not something I could show you right now just because I don't have that platform installed on this computer. And that's kind of beyond the scope of this video. It would be something good to pick up the phone, call them, reach out to them, and they should walk you through it. For me, my goal is to kind of teach and educate you more on the management and option side in this video. And the third thing you were asking is the profit and loss for the day, the P&L for the premium. Does that include the premium? Yeah, it includes everything. If I look at these two things, you got a profit and loss from the open, since you open the position. So you could see I just put on a few of these positions over the last couple of days. So since I put them on, I'm up 400, well, it's fluctuating obviously, about $500 in profits. I'm up in total from the positions, but for today, because the market's moving in the right direction for me, I'm up 230. So about half of that was today's profits. So this is today's, including time decay and everything. And this one right here is the actual position. So when I close them out, those are your actual profits. So that's the way you would look at that. And yes, it does include kind of the premium that's involved in there, because when you close it out, you close it out. And the premium, what it does is it decays the actual value of it. Just kind of same thing like when you're selling your cell phone right here, eventually, first you might have paid $600 for it, and then with time it decays maybe to $100. So now you might only be able to get $100. So that's the same thing with these is, hey, you might have bought or sold these contracts for a certain amount of dollars, and then a little bit later they decay, and now you can get a little more or less depending on if you're a buyer or seller. So I hope that makes a little bit of sense for you, gives you some thoughts and insights to the couple of the questions that you have. And of course, if you have any questions that you want answered, for those of you that are watching the video, check out our website at tradersfly.com. And when you get there, let me pull it up for you. When you go ahead and get there, you can go ahead and go to support and submit your question right over here, and submit a question by voice. And of course, don't forget to check out some of the options, getting started one-on-one or 101 here, getting started guide, day trading, and penny stock trading, which we're working on some coaching, membership things, and other great stuff. Anyways, with that being said, thank you so much for joining me. Remember to hit subscribe here by clicking the link on this video, or join the newsletter list so that way you get notified as we release new classes, educational material, books, discounts, coupons, all that good stuff by clicking the link here. Thank you so much. Remember, do what you love, contribute to others, but most importantly, live life abundantly. I'll see you next time.